Hi guys, it's Zhang again from Moolahwise.com, and in today's video I'll be explaining some of the most common definitions around life insurance that I use in all my videos. I will be explaining it in layman terms and then what it all means. So let's get into it. The first definition I want to explain are the different types of life insurance. The first type is temporary life insurance, which are the term and the group term life insurance. Term life insurance is the original life insurance, and when most people think of life insurance, they only know of term life insurance. Term life insurance is only designed for a death benefit, so think of this as just the cost of insurance. Another type of temporary life insurance is called group term life insurance, and group term life insurance is just the term life insurance you get from work. Now that you know what that means to have a term life insurance, let's define some of the permanent life insurances. And just remember that permanent life insurance is just cost of insurance plus cash value. So you just want to think of permanent life insurance as two engines. One engine that eats your money, or what we call the cost of insurance, and the second engine which grows your money, which we call cash value. The first type of permanent life insurance is what we call whole life, and sometimes I'll use the abbreviation of WL. And here's the definition of the whole life insurance. You could watch my other video about whole life insurance to learn more about whole life insurance. The second type of permanent life insurance is called universal life insurance, and sometimes I'll use the abbreviation of UL. You can watch my other video about universal life insurance to learn more about universal life insurance. But that is the general definition of universal life, or UL. And the third type of permanent life insurance is what we call variable universal life, or sometimes abbreviation of VUL. And in the VUL, the money engine uses a mutual fund. So no matter what type of life insurance it is, there's a engine that eats your money, which is the cost of insurance, and then there's an engine that grows your money. The fourth type of permanent life insurance is what we call index universal life, and sometimes I will use the abbreviation of IUL. And in an IUL, the money engine grows using a index with a floor and cap to credit your rates of return. And remember guys, your money is not actually invested in a market, but it just uses an index to credit your rate of return. In a VUL, your money is actually in a mutual fund, but in an IUL, or index universal life insurance, your money just mirrors a index and not actually in the market like the VUL. So hopefully you guys understand the difference, because a lot of people come to us and ask us that question. You could watch more about my other video about what is index universal life insurance and what are some of the pros and cons of owning index universal life insurance. The next definition I want to cover is the word cash value, which just means the savings component of your permanent life insurance, or your investing component of your VUL. And additionally, permanent life insurance just means cost of insurance plus cash value. So every time you hear me say the word cash value, just replace it with the word savings component of my life insurance program. So just when you hear the word cash value, just think savings program or savings component. And the next definition I want to talk about is the loan rate. And loan rate is just the rate that the insurance company charges you to take a loan from your life insurance. And in some IUL programs, you can even get the loan rate at 0. Next definition is what we call the surrender value, which means the amount of money the life insurance company will give you if you cancel the program. And since permanent life insurance is designed to be a long-term savings, the insurance company wants to incentivize you to stay longer. So think of a mortgage of a home. If you walked away from the program, the mortgage program, in the early years, you'll get nothing from the bank. So similar to an insurance program, you won't get that much if you walk away in the early years. And the next definition is what we call the word lapse. A lapse just simply means that the protection is gone. This happens when the owner of the program doesn't pay their cost of insurance, or their cash value can't pay for their cost of insurance in a permanent life insurance program. And the next definition we want to discuss is what we call the death benefit. And it is, since we are talking about life insurance, death benefit is what your beneficiary gets when the insured dies. And the next definition is what we call the insured. And insured is the person that the protection is protecting. And the insurer just means who is providing the insurance, or the insurance provider. And the owner is the person that pays the monthly amount or the premiums and has access to the cash value. Beneficiary is the person that receives the life insurance death benefit when the insured person passes away. And withdrawal means to withdraw from your cash value of your permanent life insurance. Next is the word annuity, which just means a self-funded pension. Cap means what your cash value will earn as a maximum rate of return. Watch my other video about what is a floor and cap using real numbers to get a better understanding. And floor means what your cash value will earn as a minimum rate of return. Watch my other video about what is a cap and floor with real numbers to get a better understanding. Participation means the rate at which you get to participate. So for instance, it could be at 100% participation or 80% participation rate. That means that at 100% participation rate, you get to participate 100% of whatever the rate is on your rate of return, that is. But if it's only at 80%, then you only get to participate in 80% of that rate of return. Next definition is what we call the no lapse premium, which is the minimum one can fund into a life insurance per month to prevent it from lapse. And target premiums are slightly above the no lapse premium amount that one can fund into their life insurance program. So keep in mind that IUL, specifically IUL, is a very flexible program. Simply you could pay more or you could pay less. And 7-pay premium is the maximum you can fund your policy before it is deemed an investment vehicle to the IRS. When you hear me say 7-pay your program, just replace the words with max fund my program. And the next definition is what we call rider. A rider is what you can add on top of your insurance contract. And how I remember this term is, think of the show, remember the show Deadliest Catch, and when they have extra crabs riding on the outside of the cages, the fisherman on that show calls these extra crabs, quote unquote, riders. But in our case, these extra are just extra, instead of extra crabs, there are extra contracts that rides on top of your life insurance. So for instance, a long-term care rider, a terminal illness rider, a chronic illness rider, a critical illness rider, etc. And the last definition I want to cover is what we call living benefits, which means the proceeds you can use when you are alive. So now that you know the most common words in life insurance and what they mean, don't get intimidated when you hear me use these words. Just replace the actual word with the layman definition that I give you. So hopefully that will make things more clear and more understanding. We have a mission of helping 1 million families understand the importance of having life insurance to protect your family's hard-earned wealth. If you want to get involved with our mission or want to make extra income on a part-time basis, please reach out to me and I can help you get licensed and appointed with some of our life insurance provider. I know with this high inflation environment where everything costs a lot more, you can neutralize that extra cost with extra income. And if you have any questions about life insurance, please reach out to me at info@moolahwise.com or learn more at moolahwise.com. And thank you for listening. Bye-bye.